Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me introduce today's longer term chart. Today I'll be looking longer term at euro against the dollar. This time last year, I pointed out how we had seen the market's bullishness halted at the end of January 2021 with a pair of indecisive spinning tops, right at the top of the recent market. I pondered then as to why the market chose the 123 to 124 area and that particular time in January to peak. I suggested it was not due to a single reason but a coalition of reasons. For starters, 123.76 was the 38.2% Fibonacci line of the big 1985 to 2018 move. Also close at the time to the neckline of the complex head and shoulders pattern formed over 2003 to 2018 move. That's currently at 124.96. Additionally, whilst we had higher highs back in early 2018 and lower lows back in 2012 and 2010, the closes, indeed some of the lows, were in that same 123.76 area. Somewhat obviously in hindsight was how the market did not like closing over the 21st century Fibonacci line at 121.30, only managing a single monthly close on two separate occasions. These small twin peaks led to a double top pattern, which saw the downside targets achieved. I also pointed out a few things going forward. Firstly though, now retired, we had the crossover of tines of the January 2017 to March 2020 bullish Andrews pitchfork and bullish shift pitchfork. As I said a year ago, and I quote, "The crossover of tines of these two related pitchforks is important. When tines cross, you can expect one or more of the following: change in trend, a reinforcement of a trend, a volatile period." The first crossover happened back in April, that is back in April 2022, which saw the middle dip of the previously mentioned double top pattern. Please note the next one is due in May 2022, end of quote. I will speak shortly about May 2022, but I'd like to begin with the November 2021 action. This was the first move down below all the moving averages since April 2020, and how it led to the development of two new patterns originating back at the end of 2016. The first and simpler idea is the end of 2018 to April 2022 sideways triangle, which I've highlighted in dark blue on my monthly chart. Though not a complete pattern, it is still a verified sideways triangle made up from the February 2018 to date downtrend, currently at 122.20, and the January 2017 to date broken uptrend, currently at 108.90. I've kept the uptrend alive despite it being properly broken, with the second monthly close below it in May last year. This is where I bring up the tine crossover again. I've kept the uptrend live as I suspect it may play a role in the near future. The second and more complex idea is early 2017 to April 2022 cat's ears pattern. This is effectively a double top formed over that period, but one that is inside a declining market, such as we've seen. The sideways triangle had a primary target X at 100.25, which was achieved in July last year. It has a harder to reach, much harder to reach, target X2 in the 86.05 zone. This is not far from the target X2 in the 87.15 zone, the target for the cat's ears pattern. However, the market has seemingly suspended bearish activity for the moment as prices late last year formed a V bottom in September at 95.34. Looking back, I did find some congestion starting at 9600, stretching from highs back at the start of 2001 and mid-2000, all the way down to the 8400 zone. However, these did not look that strong, and not nearly enough to cause a V bottom, so it was a little perplexed. This is the reason why I've kept the broken uptrend still in good order, as I suspect we may see the beginnings of overhead resistance appear from this specific broken uptrend, currently 108.90, which may soon be reinforced by the 2018 to 2020 50% Fibonacci line at 110.45. You see, the uptrend crosses the 50% Fibonacci line in August 2024. Thus, the targets X1 and X2 can still be seen as live despite the recent rises in 2022. Two final features to be aware of for the coming year. Firstly, the moving averages. We have during 2022 seen dead crosses amongst all these declining moving averages. The 1 year moving average currently 104.72 down through the 3 year moving average currently 112.5. The 2 year moving average currently 110.97 down through the 5 year moving average currently 113.20. And the 2 year moving average down through the 3 year moving average. These are lagging indicators, though the first dead cross was very much in the lead back in April last year. Secondly, V-bottoms. Well, V-bottoms sometimes make an extension or a shelf, if you like, sometimes like a bull flag or a pennant shape, and sometimes these secondary bullish patterns also fail. Thus, an extension or shelf would tie in with the possibility that the broken late 2016 to date uptrend, currently at 108.90, may be the instigator for such a pattern. We'll have to wait and see how this develops during this year. Thank you for listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.